Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, September 20th, 2018, and we're just after 4:30 p.m. Central Daylight Time. And yes, I was gone yesterday. It was the holidays for me, so I had one wise guy say he took another vacation. Come on, an important date. Name Ira Epstein. As you take a look at these markets, what you're seeing in the metals is a reaction to the dollar breaking today. Now, it's a lot of different things that work in the market. Is the market looking in part at saying, okay, we've got a next week FOMC meeting. We know that the Fed's going to raise interest rates, barring some crazy world event. Boom. December, high probability there. Okay. China deciding to make a move on tariffs, not for the U.S., but for everybody, saying certain items they're going to lower their tariffs. Well, that benefits the Europeans. They do more business really with China as a group than we do. So the market looks at it from that point. The dollar slips back on that. The market looking and maybe saying, you know, even though things are bad between China and the U.S., Canada and the U.S. are talking. And yes, we don't know if there'll be enough time to get a trilateral deal for NAFTA done by the end of the month, but there's talks. And suddenly we go from a market where the dollar starts down, and that takes some pressure off emerging markets too. So it gets to be real interesting as to what's going on. Now, if you got my gold report, you know that this is fitting right into the action that I wrote about. And no, I'm not going to review that. If you didn't get the report, go to our website, sign up for it, and you can get it. I think you're going to find that it's very timely for what's coming on right here. And what's happened in the gold, and you can see this to a degree on the weekly chart, is while the market dropped to 1161.40, roughly a $200 break since the beginning of the year, suddenly on the weekly charts, price action has gone sideways, and tell me this isn't sideways action on the daily charts. If you don't think that's sideways, you should shut this video down. That is what we call sideways price action. And in sideways action, markets start, how do I explain this the best way to give it to you? Markets build pressure. And that pressure as it winds itself up. Now, when I put Bollinger Bands on, you'll see that better. Here it is without anything. The swing line is a measurement tool that I created so that I can look at a chart very quickly and know if it's in an uptrend or downtrend according to the definition of, is the market making a pattern of higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend, and no trend would have a higher high and a lower low in some sequence. This pattern is bullish. Higher lows, higher highs. The market is trading over the 18-day average of closes, but it's been on either side of it, and I think you'd agree it's almost hit it every day since back here, literally since the very end of August. So look at that. So yes, it's got the swing line up and it's got upside bias, but that changes back and forth on you. What's really happening is what's being defined in the Bollinger Bands, and that is narrowing in the market, and as it's pressing on that market, these bands, the price pressure's spinning away. The question is, does the market have the power to break out through the upper band and start a run, or does it come down through, believe it or not, this low, through 1189.50 to break another sequence of events here called a price count? Hasn't done either yet. It's just the grind. That's why I wrote the gold report. In my report, I give you an idea of what I'm expecting. Resistance now coming in at 1216.10. I can tell you this market was trading at 1213 in the last 20 minutes, 10 minutes of trading today. So you still got the market probably going to make a run for that upper resistance area. when we come over here to, and it's going to load here, the GLD ETF, GLD is also acting pretty darn good, and it'll come up in a second here. And GLD is confirming just what's been going on with the other. We have the pattern of higher lows, higher highs, and just like in the futures, it's got the narrowing here as to what's going on there. Now, I might run into the same problem with GDX for a minute, that once one fills in from stocks, they all come pretty fast. You've got this more bullish. This market took the leadership again. Now, on the previous break, and it was a heck of a break, the market just kept dropping from summertime, literally all the way down to now. And we've had the first bullish pattern in this market in a very long time. You might say that was it, and I say it wasn't it. You weren't over the 18-day average of closes to give the bias up. Let me just show you this, if I can get this to back off. It's not going to let me do that, unfortunately. But that would be the bias backing and filling in here and showing that as you were climbing in the momentum, always climbing over the 18-day average. Just hasn't done it. The gold-silver ratio. Often, in order to get base metals to put on a rally, you need the gold to lose to the silver. And that accompanies, I know it sounds crazy, backwards, but it accompanies higher gold prices as it starts following the other metals. It's sort of like inflation is good, the economies are good, people are buying. And what we're suddenly seeing is silver challenging its 18-day average of closes. That is a friendly part. We're seeing copper make a run for the upper Bollinger Band. Now, I was looking for reasons why this would be happening in the trade wars, and the reason that I can find on the internet most often is that people are saying that China realizes these trade wars have slowed. Their stock market's down 20% this year. Their economy, their growth is slowed down rather dramatically. So they're looking inside. They're looking inner. And as they're looking inner, they're talking of infrastructure, more homes, all those type of things that still require copper within China. This doesn't mean that they're losing their market share abroad. It's with the U.S. this trade is a disaster, and it's going to stay that way until they change their ways. I don't think your president's going to back off on it. And I would assume that this market gets up here into this 278 level, and then reality comes back in to a degree. But they call this Dr. Copper for a reason. This market's no longer in a downtrend. That's helping the stock market also to a degree. Where the strength of the market is in part has been in platinum, that's strong, but the real power in this market, and I've said it repeatedly, has been the palladium market, and it's just been a running market that has kept what I call the strongest of all indicators, an embedded slow stochastic at work. Admittedly, this market has 3 days in a row over the upper Bollinger Band. Same now in the platinum. You typically don't go more than 5. 5% of the time, the market will trade within the black Bollinger Bands. My rule of thumb, and it's only a rule of thumb, that when you get consecutive parts of it, each one of those represent a percentage point of that 5. So I give the market a 2% chance tomorrow of closing over the upper Bollinger Band. It's not a top-picking method. What it is it's saying, you know, it's up there. Is there a better entry point possibly? And if one were long, you might want to have trailing stops, figure out ways, because the odds favor that the market will pull back into the bands. In the December dollar index, you try right now to break out of sideways action. This market is favoring the downside. You got lower highs, lower lows, you're under the 100-day average. In order to make a trend happen when you go sideways, it is common that you get, if you break out of these Bollinger Bands, overbought or oversold to start with. You're in the oversold area right now. So when I look at it, I have reasons to have excitement about markets. I think that I'm going to be covering this in great detail in my writings. I already wrote a gold report, and if you didn't get it, you want to give us a call or go to our website so that you can. When you go there, you got to sign up for it, then it will be sent to you. That's how it works. So be certain to do that. I think you'll find this pretty interesting. I'll probably have a silver report that I'm writing right behind it to tie together. And when I pull certain triggers, certain people will know about it. I promise you that. So how do you get my market research? Call us, go to the website, give it a try, and I'm Ira Epstein.